Alright guys, FX Mesh here, smashing it. What is going on, guys? Now you're back to my channel. This channel is just designed to share my ideas and my thoughts, and also inform us as regarding trading, because we all know that trading can be very difficult, and the best way for us to learn is to share our ideas, and see how we're able to come up with solutions that can help us better improve our trading. Today I will be glad to share with you my experience about some pairs I took, which turned out to be a loss. Many times we can't just be posting our wins. The truth about trading is very important to know. Now, the truth about trading is that losses are in trading, and there's nothing wrong with losses. So what is wrong is the inability to identify why is something wrong, why is something this way or that way. And today I took losses, which I'll be sharing with you today, which is very important. I'll start with this Euro GBP. Yes, Euro GBP. I took Euro GBP earlier on this week, I think 2 days ago. Today is 20th December 2023, New Zealand time, 5:05 p.m. I took this trade 2 days ago, and I was quite motivated because I've seen a solid opportunity which I'd like to exploit, but somehow I ended up in a loss because price has already I already tapped onto my stop loss, and I actually lost the trade. Actually, my stop loss was around here. I can't remember my toes was around here. So first of all, what I did was I actually trade simple break and retest, allow price on a strong impulse to break a key level, then allow the price to come and retest that key level and continue in the direction of the impulse. So that's my basic way of trading. So what I've done so far this year excuse me, is to incorporate some ideas which I found very important from ICT and ICT model, and also smart money concept. Now, ICT model, what I've understood by ICT model is that ICT has to do with liquidity grab, and I actually started paying attention to ICT because I discovered that I traded last year 2022, and I discovered that last year's trading was a little bit similar to what this year's trading. That's the way the market moved, but there's something particularly I identified, and it was affecting my trading. I wasn't seeing profits like I would like to see. So what I observed was that there was a lot of manipulation. So what happens is the ability to identify where are market makers actually performing this manipulation. And I will show you. Like, for example, now if you look at this Euro GBP 30 minutes time frame, you can easily see that there's a manipulation somewhere around here. How? Now, if you go by the ICT model, you discover that here is liquidity. There's liquidity graph here. There's money here. There's money here. There's money here. And what price usually does is that once price wants to break out of a strong consolidation, this is what happens. You see, market makers will drive price past where price has already been testing, then bring it back again into it. So it creates a purge. That purge will now send a kind of a strong displacement into the range. So first of all, we identify a range here. I'll make it thicker so you can see clearly. Make it thicker. Another one here. Okay. We have identified a range. Then you see price. This is what price has done so far. Price has done this. Down. Sorry, let me make it thicker as well so you can see what I mean. Okay. It comes down. It bounced off, it comes down again, it bounced off. You can see that this is what price actually did. I'm just showing you exactly what it did, not me. We follow how price behaves, and it came down. Look at now, watch this last tap. This last tap, it came down and took out these points. I will delete it so you can see clearly. You see that. Let's make it bigger so you can see what I'm trying to explain. You can see that price. See here, price got here, price got here, price got here, and it played around here a little bit. And there's kind of an internal whatever, something here. Then it came down. It came down. Look at this. Look at this place. This is where manipulation starts. Price came down to take out these liquidities, to stop out the traders here, and drove price up into the range again. Then it pulled back around here, then started going up. This is what I learned from ICT, that when there's a range, if price wants to drive to a certain direction out of range, it wants to break out of the range, it gives a purge. Then it pushes into the triangle. Sometimes it can create a market shift and break out of the range and start going. So in this case, it broke into the range. So that is not the point I'm trying to make. What I'm trying to make now is that now we have clearly identified that price has pushed downwards, which is a bearish push. Now formed a range here, then broke out here through a displacement here, then pulled back, then went up, retested this level. This was where I entered. Now, when I knew that there was a break out of this level, price broke out of this level. This is a strong level. Price broke out, came back to retest this level, as you can see, then pushed to the upside. I was now more interested around this area because the overall thought is that price has now switched from bearish to bullish impulse. So it means that on the long run, price is going to drive upwards somehow. But before price goes up, it's going to pull back, come here, take out this. So price took out this liquidity here. I entered here because on a 5 minutes, I'll show you what a 5 minute looked like when I entered. This was what a 5 minutes looked like. Pull back, went up here. I knew price is going to drop down a little bit before it goes up. Look at how it was. It was already in profit. But what happened? Price started going upwards. Price started going upwards. So the idea was that I took a sell here from this point because I expected price to dance around here in losses, then come down, which is actually went down in profit, but it already stopped me out before it entered profit. So the mistake I made was that I would have given maybe enough time for price to, because around here was US session also. The reason why I entered was US session. It was US session. It was at the beginning of the US session. It was 2 o'clock AM here in New Zealand 2 days ago. And though it was on Monday, but I would have given enough allowance for price to, price to cool down here, then take out this liquidity. Because at the end of the day, it's about liquidity grab. Once there's a liquidity grab, once you can identify a liquidity grab, definitely there must be something profitable for you. The trade will be successful to a large extent. We must identify liquidity grab. Very, very important, because look at what price has done here now. Market makers have actually driven price up to take out this liquidity, to stop traders out here, and brought price downwards. So I would have given more allowance for price to play out here. Once the session started, I would have waited a little bit for price to drop and taking a sell here. Then I would have been in profit, good solid profit. But somehow I ended in losses. So that was the lessons learned. But now going forward with this pair, what I'm seeing is that now price has pulled back, has taken out this liquidity, has gone up, pulled back again. I will now be paying attention to how price is going to break. Once price break out from this level, then I will not be able to resolve now know what is going to happen. I want price to break out of this level, then come back to retest this level, then I'll begin to resolve this, what's going to happen around here. Then I'm looking for a buying opportunity. Now I'll go over to another loss that I took, that I incurred during my trading. I think this was last week. I think it was last week or this week. I think this week, 2 days ago as well. Yes, I took a loss here because now the overall trend is a bearish trend. Now what I do is that I identify a range. First of all, I allow price to break out of the range and give me a purge, and then I now look for a displacement that follows the purge. After a displacement, I wait for a fair value gap. This is what I mean. First of all, look out for a range. Okay, a range as a result of the fact that price has played around, bounced around multiple times. Then let's assume price is going to go up. Price will give you a purge, a kind of a fake out. This purge here is to take out the liquidities on the left, then push up higher with the displacement, which will create a break of structure somewhere around this area, right? Then I'll find a fair value gap here, where price will not tap into to now shoot to the upside. And this is a technique that I'm using, and it has been working. I can show you some example of trades I took that came out in such came out well in such manner. This is the kind of idea: a range, which is an accumulation, a pullback to take out the liquidities around this area, which is called a manipulation, which is a purge, a push into a range again, a pullback from a fair value gap attraction, because fair value gaps behave like a magnet, then an explosion to the upside, which is called distribution. So accumulation, manipulation, and distribution are the core concept of ICT trading. So that's what I learned. This is the concept, this idea. The way this thing is like this. This is what I learned from ICT. Then also it depends on how the market is. I also learned I also combine smart money concept with ICT, with break and retest. That's how I trade. So it depends on the circumstances. Now let me show you. Let me go to go to where I was trying to explain just now. Now fair value gap. This is the model of a fair value gap. Now look at this. Look at this trade. NZD CHF. This happened last week. Now you can see that this is a range. Liquidity here, liquidity here, liquidity here. Look at what price did. Price came down, took out these liquidities like a fake out, came up, creating a purge, retest, and you can see what it explode to the upside. If you have entered here, let's say you don't know what to do at all. As fast as you are seeing that price has already taken out the liquidity, and you just be patient a little bit for price to go up a little bit into the range around this area. If you are taking a buy here, definitely you'll be in a really profit. Now look at what price has done again. Price has done is to look at this range, extend this range further. Okay, extend it further. Look at what price has done. Price came down again, created purge. What is the essence of this manipulation here? This purge here. The essence of this manipulation here is to take out liquidity. The more liquidity that here, the liquidity here, all this one, take out the liquidity out. You see how big it is. A big purge and a push to the upside, but a kind of a small retest here. The same thing that happened here is the same thing happening. Why is that? Why is it that price is always taking a purge after a purge, an explosion to the upside? That is an idea. You can trade easily like that and make profit. That's the concept I discovered this year, and it's making sense. And I'll show you. Look at this one. Took out liquidity here, and it pushed to the upside. See, look at this one. The same thing. A purge here. Took out the liquidity on the left. A significant purge here. Just a little bit of patience. Allow the price to push to go into the range. Look at the range here, and a retest and fair value gap attraction. You see, sometimes you don't wait for a break of structure here. You just allow price to start shooting to the upside. So what I was trying to do is that what I've done this year is that I've been trying to combine this model, which is what? Compression, manipulation, and distribution. If price is not in this, if price is not in this, if price is not in this, if I wait, actually I wait for setups in this way, or I use smart money concept where I allow price to build up, then I'll find an order block. Because price has pushed to the upside, I will allow price to come and fill this imbalance. When price fill this imbalance, my target will be here. I will explain what I mean. I will allow price to come down. Break one of the structure here. Create a kind of inducement, then come up here, and I will find signs of reverse around here, and it drops down. Now I'll show you. Let me go to. I want to show you something. I want to show you what I mean. So I try to combine both of it because the market has different. Different positions and different setups. Now you can see here that if you move this line here, this takes out this liquidity, and you can see how it drove to the upside. Here can be a range. Now if you look at a bigger picture, you will see that the ICT concept is inside SMC. So what I've done is to study both concepts and try to incorporate it in my trading. Now let's go to the chart and see if we can find any circumstances or setup that looks like, you know. Okay, for example, now this euro, if you look at this euro GBP, look at this euro GBP very, very well, you see that this euro GBP appears to be like a smart money concept I just showed now. Now what do I mean is they've been there's small break of structure all around here. And if you look at it from what I've explained here, you can see impulse to the upside, order block, impulse, order block, impulse downwards. Price is coming to fill this imbalance somehow. Price has to fill this balance and tap here. But before price gets here, there's going to be a kind of a break of structure up all through to this level. Now there are different circumstances. Only here alone you can take advantage of what is happening around here by allowing price to take out liquidity here using ICT concept only here. Then you can also use now price going upward, allow price to go up, break and retest. Then also a push to the upside. And if you look at a full picture, you can see it from a SMC. So that's just what I'm just trying to summarize what I've known, and also the like I've shown you the pairs I took and I lost. It's all about learning. Each time you lost, that is when you actually learn, because you kind of remember what really happened. When you're in a winning streak, or when you have won, you can be overexcited and you're not learning anything and just, oh yes, okay, it's alright, I've won this and that's fine. But when you lose, it's always very important to journal it and also share it with your friends, or take advantage of the mistakes you made by ensuring that next time when you see such mistake, you can now actually avoid it. So that's how we grow in trading. Now this is FX Mesh, smashing it. If you like what I'm about, please like, subscribe. I'll see you some other time. I'll see you soon. Merry Christmas and a prosperous New Year to you. I'll also be posting relevant content here where we can share our ideas and also learn from that. Always remember to trust the process. Always remember that trading requires patience and mastering a certain skill set, mastering your strategy. Once you have a strong strategy and a style of trading that works consecutively, it indirectly helps your psychology. Once you have a clear picture of how you see the market, your psychology will also be built up as well. So I'll catch you another time. See you soon. Thank you very much. Peace out.